Welcome back guys, CryptoFly channel, new educational video, how to work with parallel channels on TradingView, how to open and close position, how to build a strategy based on parallel channels. Let's dive in. I'm not a fan of parallel channels. I already made a video about regression trend channels. It's more personal for me useful, and I already showed you how you can identify the regression trend channels based on even on indicators. Today I would like to talk about parallel channels. How to find out that tool, you go into TradingView. Here's a second section, tool, channels, parallel channel. We got a horizontal channel, downtrend, uptrend channel. I'm not use channels so often. Most likely if I use it, it's horizontal channel. If you need to basically hold the line and draw the channel straight, you need to hold shift. This one, moving down. Got it. So this is a horizontal channel. Why exactly I use this? Mostly because I guess over than 70% what we time on the market, price will move in the sideways. We form deviations. It's the time when we're breaking out the trend line and then come back inside a channel. So usually it looks like this one, and after that I will show it on the practice. So for example, the price move like this one, then we find a stop, then we're going down, drop it down here, form deviation, come back to channel, form deviation at the top, come back to channel, and trade some time period, you know, with maybe one more deviation, then breaking out and going higher. So this is basically horizontal channel. How to open position based on these hypothetical and subjective lines. When we touch it, top of the channel, but we can't identify this is exactly the top. That's why we need to wait when we form the bottom. When we got a top and we form it, the bottom, so we identify, we got the range. We can open position here, long, close position over than this top or over the middle line. Here we close position, and we can open the short position. That's why it can looks like this one, for example. This is a long position. Stop loss is up to you based on your strategy. And the short position like this one. That's why, guys, it's always subjective, because on different time frames, the channels will look totally different. Inside this horizontal channel, we can have, it's a 4-hour time frame. We can have different channels on 1-hour time frame. A lot of channels on 15-minute time frame, uptrend and the downtrend. So basically, if we got this is a horizontal channel on 4-hour time frame, inside this channel we can find and identify this one on 15-minute time frame. Just example, and trade inside here. Then we open position here, close here, open short, and here if we open short and not close position, we could get a stop loss. That's why, guys, all these channels is subjective. But for me personally, the horizontal channel is a really good instrument, because we can identify the sideways. And like I told you before, over than 70% time of the market, we go in a sideways. Also in the settings, you can turn on middle line. I use always the middle line. I identify the equilibrium of the channel. Sometimes we get a reaction from equilibrium also. You can extend left line or right line to change the background, for example, if you need it. And what is deviation? For example, we got a top, we got a drop, find a support. Usually we sweep the lows and form this deviation. It's not all the time works perfectly well, but most likely if we form the correct channel and form one deviation at the bottom, second deviation will be at the top, this one, and maybe we'll form another third deviation at the bottom, but it's not necessary. If we hold the line, most likely we will see the continuation to breaking out the uptrend deviation. The same story work in opposite way if we use the inverse scale, for example. Got it. Here's also how you can trade the horizontal channels for continuation. Let's say we got an uptrend and we stay some time period on 4-hour time frame in range. If you don't want to open position here, you wait the continuation of the uptrend. When we're breaking out the channel, you can wait retest of that channel, add a stop loss based on your trading strategy and risk management, and wait continuation for the next impulse. If we're breaking out the channel, for example, down, this is absolutely the same story. So deviation at the top, deviation at the bottom, hold the line, drop it down, retest the channel, you open position, short, and going down. This is example of uptrend channel. For example, we move some time period in the downtrend, find a support, retest, confirm support, and then start moving inside the channel. It can be really long time periods while we build the channel. Then we can breaking out, retest, and going higher, or form deviation, drop like this one, for example, retest and going down. And if you could trade this channel, you open position here, close here, open short, close short, open long. Let's go to the real chart. So this is Solana, 12-hour time frame, and the problems with the channels. Like I told you before, channels are subjective because for someone, the channel can looks like this one. So we got a range, right? But someone will use this like an entry, this like support, for example, this chronometer. This is a top. Looks legit, right? Some guys will use the channel in different ways. So this is a top and this is a support. Here, in this case, we got a deviation at the bottom. Next step, logically, will be form deviation at the top. But like you can see, everything totally subjective. Another trader can build a channel like downtrend. This one, we got a 2 touches, build this one like support. And all of them can be right. That's a problem, guys. That's a problem of the channels. All these channels, like you can see, the horizontal, legit, the downtrend channel, legit. So you could open position here, short, long, short, fix a profit. And now you can see how the price reacts at equilibrium. So this line basically legit. Some level here, legit. Another trader can still be in the uptrend channel. So let's say he got this top, and he built this wider channel like this one. And he will be also right. Short, close your trade, open long. Another test should be here. Bam, 422, for example. That's why, guys, all channels, it's totally subjective. That's why easy to identify channels after the fact. But the main problem is identify correctly channel in the moment. That's why you can draw the few channels and try to identify which one is correct. So I recommend you mostly use the horizontal channels for deviation. We are trading in a range like 159 days. So this was an impulse, correction, impulse, and we stay just in a range in horizontal channel. If we go to 1 hour time frame, we also can try identify channels. So here we got a touch. Let's say we got another touch, and we can draw the channel like this one, or we can draw the channel wider. Based on this channel, we got 2 options like usual. We can see this pump, retest, and we can open long, or we can see retest, rejection, and going down to form another retest at 120. In the books, everything looks like magic, right? So we just trade in the channel, everything looks perfect. But guys, it's only after the fact. In the moment now, we can't know, are we breaking out and retest and going higher, or it's just like on 1 hour time frame, this local downtrend channel. But globally, we can form something like this one. And like you can see, the problem can be inside this channel where we draw it here, can be the wider channel. So guys, just be careful with the channels. I can't recommend you to trade and use the channel like a magic tool. Always use the channel together with context in complex, what's going on in the market now, the seasonality, the timing, sessions. And my personal recommendation, I more often work with just a range, not in the uptrend or downtrend channels. So guys, I hope you like this video. Subscribe channel, hit the like button, hit the notification button. Don't forget to join my Telegram channel. See you next time, guys.